And joining us now is Ryan Payne. He's president of Payne Capital Management. Ryan, the Dow down 404 points. Is a recession imminent?
I highly doubt it, right? I mean, look, if you look at the economy right now, unemployment is at a 50-year low. Wages continue to go up, and in addition to that, you have low inflation, which to me could drive this economy for a very, very long time.
So what drove this yield curve inversion? Because if we think about the newest economic data that we've seen and moves by the Trump administration, they've seemed to actually send signals to the market that it is holding off on tariffs, for example.
That's right. Well, I think that's more about sentiment. Let's face it, anything going on with tariffs has been driving the market the last couple of days. I mean, it's been a pretty wild roller coaster ride, unless you've been living under a rock and you didn't see that. So, I think that has a lot to do with it. I mean, because if you look at those tariffs, just economically speaking, it's not a big effect on the U.S. economy, right? I mean, I think our exports are down like less than 1% this year. It's like 0.23% of GDP. So I think it's more about confidence and sentiment.
What about on the U.S. consumer, though? Because according to a recent study by the New York Fed, the average American will spend more than $800 in addition to what they were going to spend just due to the tariffs. I mean, doesn't that take a toll on cash flow for U.S. families?
I mean, most of that was offset by the tax relief that we got last year, so it's actually not that big an increase as you factor in that they could get the tax relief in 2018. So I think from that perspective, and the perspective of, look, I mean, Americans are actually saving again, they're paying down debt. Like, this is one of the strongest consumers that's not overly leveraged that I've seen in a long time, and I think that the markets and sentiment keep discounting how strong the U.S. consumer is.
How will you be trading this market? I mean, it's been a very volatile week with movements of 400 points on the Dow 3 days in a row. Are you taking money out of the market or buying the dips?
I mean, look, volatility is your friend. As a long-term investor, you want to take advantage of the uncertainty. And I'd also say, like, what's also driving yields down right now is retail investors don't make good decisions. I mean, you had it's like $480 billion going to bond funds this year with rates, at abysmal levels. And when retail investors do something in droves, it's never a good sign, Kristen. So I have to think that there's some value in equities here. I mean, it's reasonably valued when you look at U.S. markets, foreign markets even better valued. I'd be buying, long story short.
Look, we're covering the retail space really closely, especially as we get these retail earnings coming in, starting this week. Macy's down double digits this morning after disappointing outlook, disappointing results. What are you expecting from the other retailers, and how could that move the market?
Sure, I think it depends. I mean, Macy's obviously has been struggling for a long time, the Amazon effect. Now that you buy things online. So it just depends on how good is your online presence, right? Like companies like Walmart have done a fantastic job moving to online. So it really just depends on how you diversified your e-commerce and things like that. So I'm not sure if that's going to drive, everything going on right now. We still know the retail. We know the consumer's in great shape. So I think, we'll see some surprises in the positive.
What are you hearing from clients when they reach out to you?
Fear, and I like fear, Tim.
They don't like fear, though, right?
They don't like fear, but that's also a sign that the markets are probably reasonably valued. I mean, if you look at this year, what's crazy is the market's up by S&P maybe like 15% plus. Not sure this morning exactly where it's going to be. But investors have been selling out of U.S. stocks this year, like something in the tune of $70–80 billion. So when you see retail investors selling, you see valuations are reasonable. There's an old saying, markets climb a wall wary. That's probably a good sign as well.
How much of a concern are the protests happening in Hong Kong right now?
I think that puts a lot of pressure on Beijing, which I have to think maybe will make them come to the negotiating table with the U.S. as well, because they already have pressure because of tariffs. That might even make a deal come even sooner, just because now Beijing's under even more pressure. That could almost be a positive catalyst for the markets.
Does the market look at it as weakness on President Trump's part for delaying the tariffs that were supposed to go into effect on September 1st?
They didn't yesterday. I think in terms of his re-election, he probably has to still have kind of a strong hand when it comes to tariffs. I don't think he can lighten up too much. But at one point, he was talking about 25% tariffs on that $300 billion. Now he's done a 10% tariffs, and he's also pushed those tariffs out. So, I mean, there is some softening going on there, even if it's not right at the surface.
Oh, okay. How do you keep an iron stomach during these types of days, these types of weeks?
Well, I've been in this business for almost 20 years now. I went through the tech bubble burst. I went through the housing bubble burst. And anytime you've had any sort of sell-off, it's always been your best opportunity. So this actually makes me sleep better at night. I get worried when we're excited about stocks, valuations are high, and we think that there's never going to be a downturn again. That's when I stop sleeping.
All right, Ryan Payne, we're going to leave it there. Ryan is the president of Payne Capital Management. Thanks for joining us.